Oh, and welcome to Business Incorporated. It's a brand new trading week right here in Lagos, Nigeria, and definitely the markets are buzzing right now with risk-off sentiment. Here's what's coming up. The World Economic Forum kicks off in Davos. We'll be tracking key insights, top global business trends, and what this means for markets worldwide. And IMF has just forecast Nigeria's GDP growth at 4.4% for 2026. Precious metals on fire. Gold and silver hit record highs. Find out what's fueling the surge. That's great to have you join us. Let's kick off now with what's playing out with the markets that we track. We're seeing oil prices. They slip today as markets, they're reacting to, rising geopolitical risk. U.S. President Donald Trump there, threatening economic sanctions on several European countries, raising fears of a wider transatlantic trade dispute at early Eastern time today. And we see Brent, that's trading down a big 1.20%, $63.36 a barrel. And we see WTI, that's crude, losing that $59 level, 58.73, 1.19% down there. So we're seeing big drops there. Then on the flip side, gold and silver, they climbed to fresh peaks today as investors, they're flocking right now to safe haven assets on intensifying, tensions there with threats coming from President Trump. And we see 1.5% jump there for spot gold, U.S. gold futures. That's up 1.6%, $4,669. And we see silver shining there again, the biggest jump, 3.3%. I guess we're on the way to $100 per ounce now for silver at this rate. Platinum, 0.9% up. Palladium, then we see the lone loser there, and that's copper, down 0.54% at $5.86. That's the picture right there for the metals market. And we see the world's top business and political leaders, they're gathering in Davos today as the World Economic Forum kicks off. We're expecting discussions on global growth, technology, climate, and the key trends shaping markets in 2026. Straight from Switzerland. And we expect today we expect the Nigeria House at Davos. That should be opened by at least 4 p.m. That's the expectation today. So expect our reporters out there to bring us updates on what's playing out right there at Davos. And now talking about economic projections, we see Nigeria's economy, that's projected to grow by 4.4% in 2026, according to the latest forecast from the International Monetary Fund. The IMF says this growth outlook reflects, gradual improvements in investment, oil production, and economic reforms. But it also comes amid ongoing challenges like inflationary pressures, even though we're seeing inflation trending downward, and global market uncertainty. So that's the latest forecast there for Nigeria's economy, big 4.4% for 2026. Let's take it on to East Africa now. See, Kenya set for its biggest IPO in more than a decade as the government moves to sell majority stake in its state-run pipeline company. The sale by 11.8 billion shares, representing around 65% of Kenya Pipeline.co, is expected to raise a record 106.3 billion shillings. That's about $824 million. The offering opens on January 19th, that's today, and will run through February 19th, marking the country's first major public listing in 11 years. Definitely investors will be looking out for that one. All right, so our first conversation today, we're looking at smarter policy, monetary policy here. And, Nigeria's economy has struggled with, in a couple of years ago, unstable inflation, though we're seeing inflation trending downward now, exchange rate volatility and high interest rate. But what if the real problem is not just policy direction, but policy decision? My guest today, Dr. Olajide Oyade of Kingsgate Advisors Institute, has a new policy brief arguing for smarter calibration using, clear economic thresholds. He joins us now to explain what Nigeria needs to get right to unlock stable and sustainable growth. Great to have you on the show.
Thank you so much for having me, Ladi.
Fantastic. So your paper moves the debate from, general targets to, specific thresholds for inflation, exchange rate, and interest rate. Which of these variables is most critical for Nigeria to get right first? And why does your evidence, suggest that kind of prioritization?
Thank you for the question, Ladi. In terms of which of the three variables I feel should come first, I think that that is one of the things that we've been facing over the past couple of years, whereby we focus mostly on just one of the monetary policy variables, and how we use that to be able to solve, the economic problems, particularly inflation and GDP growth. So if by what has been happening in Nigeria is anything that I am going to use to answer this question, then that would be the monetary policy rate. But one of the arguments of the paper is that we need to shift away from only using, the monetary policy instruments such as, the monetary policy rate, which is a discount rate policy, as well as OMO instruments and the reserves to be able to, conduct monetary policy activities. Now, I'm not saying that we should move away from it, but I'm saying that there has to be a consolidation amongst other monetary policy instruments that we can use to solve monetary policy conditions in the economy. Take, for instance, exchange rates, as we can see over the last 3 years, have been has been volatile, right? Except for maybe sometime last year, slash the beginning of this year, we're beginning to see a lot of stability within the exchange rate framework. But again, you could see that what has happened as a result of the constant depreciation in exchange rate from, I think, about 360, at the official and non-official markets in 2022 to about 1,500 as our last year, before trickling down to about 1,000, I think 445, towards the end of 2025. You could see that led to, rising inflation in the economy, which was affected through, imported deflation typically, because when you depreciate your exchange rates, what it means is that imports become very expensive, for you to import. And as a result, that has a pass-on effect or a spillover effect into, the cost of, selling some of these goods. And even if it's going to be used to make products or, goods and services, it has a pass-on effect to increase the cost of, input of goods and services in the Nigerian economy. So I would say that, like you rightly said, like you asked, which one of them has been very important? What I'm trying to say here is that we need to start thinking about not just which is very important, but how we can, use the current monetary policy framework to be able to tackle the existing problems, which is constant exchange rate depreciation, rising inflation rate, as well as a high monetary policy rate. Because again, if I should go into inflation, Nigeria has constantly been using interest rates, which is the monetary policy rate, to be able to solve Nigeria's inflation quagmire. And again, what we've been able to see is that inflation in Nigeria is currently driven by supply side events, such as, like I mentioned earlier, the exchange rate pass-through of inflation, of imported inflation, food security crisis, farmers, herdsmen clashes that we constantly see in the northern part of the country, then the security apparatus. So again, using monetary policy instruments to solve these, some of these issues, may not be the most effective way to go about policy planning in the economy, because these are supply side constraints, and those supply side constraints must be tackled using supply side measures. That is, those measures that can help, reduce the effect of some of these supply side constraints on the Nigerian economy. And that is why you will see that, the monetary policy rate, despite, hiking, despite its hike, currently at 27%, is still not been able to, bring down inflation to the levels that can become sustainable.
Right.
And
Right. Yeah. Definitely we did enjoy some stability, most of, 2025. And now, definitely we're seeing projections now that we need to consolidate on what we enjoyed, the stability we enjoyed in 2025. But, based on your identified thresholds, how far is Nigeria's current, macroeconomic environment from what you described as growth supporting zone? And which policy mistakes do you think are most responsible for keeping us outside of that zone?
Okay, let me start from the second question, which is which policy mistakes. I wouldn't want to emphasize policy mistakes because there are none. What I want to emphasize is policy effectiveness, right? So in terms of the first question, which how far outside, so we're still a bit far, but again, Nigeria has been able to attain stability in 2025, which is a very, very good progress from where we're coming from, especially in 2022, 2023, and 2024. So in terms of the numbers, the thresholds show that, for Nigeria, for growth to become sustainable in Nigeria, then inflation has to be, at single digits. But the research shows about 9.37%. If you take a look at, Nigeria's inflation as of December, which is 15.15%, that shows you that we're still about 5%, more than the actual target. And what does this target mean? It means that, anything below this target can help support growth in Nigeria, but anything above the target, it's not going to be growth supporting. Rather, it can be growth harming, and that is why, even though Nigeria is most likely going to see a growth of about 4%, 3.8% to 4% in 2025, there are still many arguments, that it has not trickled down into, the business environment. This growth is still too weak to be able to support, welfare, to be able to support employment, and to be able to support the weak and the most vulnerable households in the Nigerian economy. So these are one of the things that the paper, argues for. Again, secondly, in terms of exchange rates, exchange rates spiked to very high levels, and what the reports technically showed is that exchange rates should not go beyond 2.37% a year for it to be growth sustaining. And what that tells you is that as a result, what we are proposing is that there should be a credible target for exchange rates, for inflation rates, and for interest rates that can help support growth, and economic activities in Nigeria. Without those credible targets, it becomes, very difficult or tricky to say, oh, yes, the monetary authorities or the fiscal authorities, are performing well. So with this target, we can then use those targets as a yardstick for us to be able to judge, the performance of the activities, of the monetary authorities. The final part is on the bit of interest rate. So interest rate is still very high at 27%, and the policy work helped show that, any rate above 16.5% is growth harming. So just to understand a bit of some of the zones, right? The report also showed that Treasury bill rate should not exceed 14.5%. Otherwise, it crowds out, borrowing from the private sector, because what you see is that it's only the government that will be able to borrow, from through the bonds market, right? Because at a very high rate, it becomes a disincentive for businesses, to borrow. As a result, this weakens investment, and crowds out the private system from being able to get, loans that can help, serve as a catalyst to economic growth in Nigeria. So what this is trying to say is that, at a treasury bill rate of about 14.5% and a monetary policy rate of about 16.5%, it shows that, when your monetary policy rate is within those two bands, right, that's a warning zone to say that, look, interest rate is already rising. Anything above 14.5%, it's a warning zone to say, look, whatever we are doing, we're already almost in an overheating period. But anything above 16.5% tells you that, monetary policy is already overheating. And what that means is that any continuous hike in interest rates or any continuous hawkish stance in interest rates is going to have, a reduced, it's going to have negative consequences on the economic activities in the country, and which is what we currently have today. Yes, growth, Nigeria is expected to grow about 4%, in 2025. And again, going into 2026, we expect Nigeria to grow at about, 4.5% and the like. But again, for growth to become sustainable in an emerging market and a developing economy like Nigeria, we need to be targeting at least 5%. And the only way we can achieve this 5% to about maybe roughly 8 or 9%. And the only way we can achieve this is to ensure that, we bring inflation down to levels below, to single digits, that is 9% and below. Okay. We bring, interest rates down to below 16.5%, and exchange rate depreciation should not exceed 2.37% at the official market and about 2.5%, at the parallel market. Above this rate, it has, negative consequences on the Nigerian economy. But below this rate, it tends to support growth, which then tends to have positive outcomes on the Nigerian economy.
Right, and definitely we need a lot of support right now for the economy. But definitely with a huge population, 7 to 8% of economic growth, definitely that would help. Thank you so much, Dr. Olajide Oyade is a King State Advisor Institute there. He's joining us from there, one of their top minds on that team. Thank you so much for joining us today.
Thank you.
All right, we're seeing that just stock market kicked off the week on a positive note with the all-share index up by 14 basis points. Gains were, broad-based, led by banking sector, which rose by 58 basis points, with modest advances in, consumer goods, insurance, and oil and gas. Notable winners include, Learn Africa, Triple G, and NIMF. That's been on the rise for a couple of days now. NGX all-share index 0.13%. To the good, but we see the Johannesburg Stock Exchange that's given up some gains today, 0.14%, down 119,000. Let's look at East Africa and North Africa, talking about the EGX 30 and what's happening with the Nairobi Stock Exchange. That's unchanged, but 193 points heading to 200, and a big 1.76% advance there for the EGX 30. For Middle Eastern markets, they were seeing some positive sentiments with the likes of the Dubai, Abu Dhabi index in the green, big 0.44%, even though we're seeing the oil market down. For the Saudi, it's a mild rise, there's about 3 basis points. Qatari index, a big 0.60%. So it's mostly green right there in that region. And then for U.S. markets, we see the close today for Martin Luther King Day, but that's the last close for the previous trading session. But markets still closed in Asia. They slipped as investors assess threats from the Trump administration toward Greenland over the weekend, as well as key economic data from China that was out today. So we see the Kospi there. That's a loan gain on this list, 1.32% up. Other markets we track in Asia, that's talking about the Nifty 50. I guess we're still seeing profit taking there, 0.38% down, 25,596 points. Shanghai Composite up 0.29%. So that's a picture right there. And, definitely it's still all about Greenland and President Trump and, all of that tense exchange right there with leaders about the Arctic territory. Well, join us now. We have Lars Holter with what's playing out in Europe there. How are the markets looking, Lars?
Well, hello, Lottie. It's good to be with you. Well, it's not going to surprise you at all when I tell you, Lottie, that markets here are in the red as well. And that's across the entirety of Europe here. We have the FTSE in London down 0.5%, and that's doing better than the others. We have Spain down about 0.75%, and then France and Frankfurt, the DAX, down 1.5%. So we're down really pretty deep. And that actually, when you're looking at the DAX, it is actually getting us below the 25,000 points mark. Again, of course, the big topic, as you referred to already, is the developments around Greenland over the weekend. Now we are seeing investors getting nervous over yet another geopolitical crisis and what it means for global trade. So they're selling shares while gold and silver are on the rise. Not only here, you see that in all the markets, of course, Lottie. It's exactly what you would expect in times like these. Investors looking for a safe haven. Well, one seems to be actually defense shares as well. Those are gaining some points too. But with regards to shares, that's about the only sector we're seeing up right now.
And talking about Greenland at this point, what's the reaction coming from Europe?
Well, honestly, Lottie, it's utter shock and disbelief, and the EU has called for an emergency meeting over the weekend, as a matter of fact, where they quickly agreed on counter tariffs worth some $95 billion. That would be tariffs then on bourbon, airplane parts, chicken, soybeans coming in from the U.S. These are the exact same tariffs that have often been discussed in the past. Most recently, they were shelved after the EU did sign a trade agreement with the U.S. in summer. That was back in July. Trade agreement that had actually very friendly terms for the United States, and that was often called a capitulation by the EU. So now these terms, friendly as they might have been, are out the window too. And it becomes so clear, Lottie, that the U.S. under Trump is not pursuing a broader trade strategy, but that terms virtually change overnight. And that has even members of Trump's Republican Party alarmed.
So, definitely, what's the word on the street there? Why you think Trump is so interested in Greenland?
You know, Ladi, it's two reasons for the most part. One, of course, is that it's a strategically important location there. Greenland obviously being situated in the Arctic between the US and Russia. And that's why the US has always had a military presence there anyway. From Greenland, the US was able to have eyes on Russia, detect, for example, rocket launches. Now, with that location in mind, Trump says if the US doesn't take Greenland, then Russia or China will. However, nothing points to those countries having any such plans. And then, of course, and that brings us back to business and the economy, the second reason why Trump is likely interested in Greenland is, of course, very simply resources. There are many resources in the ground there, including rare earth elements, and those in particular the U.S. needs urgently as China, with its quasi-monopoly, is limiting exports.
All right, so much to unpack there, and definitely we'll keep tracking that and seeing the impact on risk assets this week. Thank you so much, Lars, for the details.
Thank you, Ladi.
And talking about risk assets, definitely we see a big plunge there from, that's with Bitcoin and most of the altcoins that we track. Right behind me, red on the screen. But there was also big conversations about, what to expect for capital requirements from the Securities and Exchange Commission. And obviously, crypto exchanges were also talked about there. Let's bring in Rume Ofi now to bring us up to speed. Hello, Rume. Great to have you.
Hello, Ladi. Thank you very much for having me.
Yeah, so capital requirements at this point. And the big one for crypto exchanges in Nigeria, they need to have about 2 billion naira to operate right here. What's the reaction to that?
It's actually very, very shocking right about now that the SEC had to go this route. This is an industry actually that we've actually self-regulate over time. And unfortunately, this is not considered in its highest form, right? It seems the SEC is not sensitive to the exact situations that are happening in this country. Young people are the huge believers and players in this industry. And if we consider local content and indigenous builders here, I'm very sure that just capping 2 billion won't come to the mind of the SEC. I also think that the president in his campaign promise in the previous election said that they are going to use blockchain and cryptocurrencies to enable financial industry. I don't think this is exactly what he talked about, because this in his purest form is stifling innovation. This industry is supposed to be in a way to be built among indigenous people to see how far we can get the very best of the industry, not putting caps that we young people or builders cannot be. And what this means
what do you
is
think,
that
what do you think is a good cap? What do you think is a good tag?
The industry is not a cash cow, Ladi. It's an industry that you build. So I'm suggesting that they bring all of these young people and see if their innovation is making sense. Then when the revenue comes in, government can tax it somewhat. But entry barrier having to have some amount of money. It's in a way drawing some of these our best talents to our neighbors. Ghana has done something really nice. South Africa has actually approved more than 300 licenses from digital asset players. And I don't think they actually put all of this, but this is a selective access to the entire industry, and it stifles innovation in its entirety. So I'm urging the federal government, now not the SEC, because we have been in this for a very long time. Personally, as a digital asset advocate in this industry, have been speaking for no lesser than 10 years. And it's so embarrassing that it came out that 2 billion is what the SEC is capping for license, which is entry fee.
But Rume, definitely, looking at capital requirements, most of the time is to help protect investors, because dealing with investor funds, especially with a market like with digital assets and cryptocurrency, we know that it's high risk. At this point, I guess that's the tag. Trying to protect investors. That's why they put in that cap.
I think you made a very valid point there, but this is the same mistake Gary Gensler made that actually stifled this innovation in the US before the US president actually came in. This is something that is more, you can't compare it with the traditional financial system. it is more of code. You can't fight the industry. You can't. It's a digital industry. For example, take an example like Bitcoin. It doesn't have office. It doesn't have a CEO and every other thing. So you study this. Then, if you want to preserve or guard the industry, you guard it through the technology. You don't guard it through some of this money. This money is so much that we've seen a situation whereby this traditional financial system, with all of those monies printed, they could not survive some of the headwinds that came up at some point. They actually went bust. But what you do to protect an industry of our kind is that you use the technology, you use players that understand it to better manage it. You understand? Because in this industry, code is law. But in the traditional financial industry, it is not same. So if you bring it, it's more or less saying you are using the Howey test, like what is being done earlier in the US, to be able to benchmark the existence of what is happening in this industry. So better ways to do it is to bring people together that understand this well and see how we can prioritize our country first, because we are supposed to be leading. But right now, South Africa, Ghana, Kenya is leading because there's no barrier to entry. And our young people are going there. This is brain drain, and it's not good for this current administration.
All right. Well, we'll still, keep hearing from the SEC to see if they actually review some of these capital requirements. Thank you so much, Rumi Ofi, for helping us unpack this. Thank you.
Thank you very much, Ladi.
All right. Yeah. So that's about $1.4 million. Looking at the exchange rate at this time. So yeah, definitely, that's how major markets are looking right now. Is risk-off sentiment starting off this trading week. We'll see if it continues to the rest of the week. Thanks for watching Business Incorporated. I'm Ladi Williams from the team right here at Channels HQ. Bye for now.